a few things, and we talked about that at the General Assembly this morning. Let me start with the developed economies. Most people think that the insurance, there is no insurance issue. I mean, these are developed economies, things are working well, but we learn after every disaster that actually many people, many businesses were uninsured. So one example I gave this morning is Superstorm Sandy in New York, revealing that 80%, 8 out of 10 people living in the areas flooded by Sandy had no flood insurance. So now you think in New York City, you think sophistication, you think hype, money, and then you realize that 8 out of 10 people have not done protection. So I think there is still a long way to go, even in developed economies. And then you move to developing economies, and there the discussion is very different. The level of sophistication of the knowledge, lack of data, sometimes lack of political will make it a little bit challenging. One proposal I've made this morning, just to end, is to, instead of thinking about the country as a market, can we actually think about cities as market? And I think that's more efficient because you can actually sit with a mayor and talk about his or her city and the role that insurance can play in providing that financial safety net for return, of course. And I think that will work well. So there are interesting discussions to be having, and obviously I'm a big fan of the role that insurance can play in that regard. Well, I've said a few times we have to be careful with how we use the term PPPs. That's become mainstream. The reality is many PPPs fail because we think about just bringing organizations together, writing a glossy report with a brand on the cover, and then we pretend we've achieved something. Most of the partnerships that actually work have been partnerships where we recognize the strengths and limitations of both camps. So there are great things that governments can do, great things that the insurance industry can do, but you don't want everybody to do everything. So what are the issues at stake, first step, and two, how do we bring the brain and science together and the power of the market to solve some of these issues. So if you start with that, you're more likely to go to success with the partnerships. So that's one. Two, you want these partnerships to be established for the long term. I'm not talking 20 years, but 2, 3, 4 years. It's typically what it gets for people to get to know each other, to trust each other, and to demonstrate value. So that's number one. One example is in the data sharing. You see more and more data being created, maybe a little bit too much actually. We all talk about smart data, but in the gold mine of data we have, I think a lot of that is created by governments around the world. And I think it's great for the insurance industry to be able to benefit from that knowledge. And vice versa. When disasters happen or cyber attacks happen and climate disasters happen, there are a lot of knowledge being developed through claim adjustment. So insurance companies and reinsurance companies are ideally placed to actually educate governments about what drive claims down and how we can transfer that knowledge into prevention measures and investment into prevention measures down the road. So that's one example. So when it comes to climate risk, typically the discussion has been historically about the underwriting side of the equation. And that's typically how people think about insurance and reinsurance companies, when the real power, or the second power, I should say, of the industry is in the asset management side of the equation. And to the extent that we can leverage that financial power of the industry, we're talking about maybe $30 trillion of investment, second only to pension funds, to invest in resilience improving assets, new product, new services, whether it's infrastructure project or like, I think will make a big difference. And obviously, I think insurance and reinsurance companies have a vested interest in doing it right because you're winning on the asset management side and you're winning on the underwriting side, and in a low interest rate environment, I think that's important. The challenge though is that right now the regulatory systems forbid basically insurance companies to do that because the regulatory system try to focus on the short term. So low risk, low reward, short-term vision really as a child of the financial crisis, and I think that was about 10 years ago. I think we have to learn not to continue to fight the last war, but leverage that financial power. To the extent that we have that discussion with regulators about the tremendous possibility offered by this pool of investment, and we can move the needle of the regulatory system to allow that investment to be deployed, that would have been actually a great partnership.